Is life insurance worth it? By the end of this video, you're going to learn how dumping loads of cash into a life insurance policy works, what the costs are, and what the benefits are. Hi, I'm Matt Kennedy. I'm the founder of Kennedy Wealth Design and the author of the best-selling book, Untapped Wealth. I work with entrepreneurs, business owners, and high-income professionals, helping them have a better life, a better business, and a brighter future. Be sure to subscribe to my channel and click on the notification bell so that you'll be notified whenever we post new videos. First, let's answer the question, what is cash value life insurance? There's a lot of misnomers out there. Is life insurance an investment? No, it is not an investment. Life insurance is cash storage vehicle with benefits. We're going to talk about those benefits in just a second. Let's talk about how life insurance is designed. For any amount of death benefit, there is a minimum amount that you have to pay for the cost of insurance. Now, that minimum amount is set by the insurance company, and typically this is what most advisors recommend, and it's called term insurance. It's the minimum amount of coverage. It covers you for a certain amount of time, and that minimum number is set by the insurance company. But there's another type of life insurance, this cash value life insurance, and it is an account that allows you to not only have the death benefit, but also to store cash and build up cash in the account and potentially earn interest on that cash. And what's interesting is there's a maximum amount of money you can put into those types of policies based on the death benefit. And that maximum amount for any given amount of death benefit is set by the government. Why would the government limit how much money we could put in one of these cash value life insurance policies? They do so because there are very attractive tax benefits and other benefits that come along with these policies. They've been abused in the past, and the government has stepped in and said, listen, we just want to make sure that there is always a death benefit attached to these policies. That's why the government gives us the benefit to put money into these policies, is because they want us to own life insurance. Because if we pass away and don't have any assets or life insurance, who has to pay for our families to live? The government does. So they incentivize us to get life insurance. I've heard an accountant, a very famous accountant named Ed Slott, say that the tax code, when you start to look at it, it's really a behavior incentive plan. They give us tax benefits to encourage us to act certain ways. One of the ways that they want us to act is they want us to have life insurance death benefit. Now, if I put more money into the life insurance policy than the government allows, and I go over this maximum line, then that's bad. I have a lot of tax ramifications that happen, and I lose some of the benefits. But if I can design the policy where I can put enough money in and not go over the line, but go right up to the line, then this creates the most efficient way to store cash in a life insurance contract. So the first thing I want to do when designing a policy is discover how much money we're going to store into the policy. And then second, we're going to go to our software and we're going to solve for the minimum amount of death benefit that we have to carry to store the cash to get the maximum amount of benefits. It's just a solve that we do based on the IRS formula that tells us the minimum amount of death benefit. So see how we're flipping that when we turn these into a cash storage vehicle. Most of the time you decide on a death benefit number and then you let the insurance company tell you how much that's going to cost. We're flipping that. We're saying first we want to know how much we want to put into the policy, and then second we want to solve for the minimum amount of death benefit. The result of doing that, driving that death benefit down, is that we have a lower death benefit, we have lower cost, and therefore we have more potential to build up cash. Speaking of cost, let's look at the cost over time of a properly designed life insurance policy. To illustrate the cost of a maximum efficient life insurance policy, I have a 40-year-old male putting $50,000 a year into the policy. And you notice our death benefit first year is $1,524,481. It's an odd number like that because that is what the solve produced. We literally asked our computer software to solve for the minimum amount of death benefit we have to carry to put $50,000 a year into this life insurance policy. And now I've pulled out the cost of insurance. And from age 40 to age 65, the cumulative cost of the life insurance is $393,000. Now, you might think that that's expensive, but let's compare that to other costs. I've created a hypothetical account doing the same exact thing, putting $50,000 a year from age 40 to age 65, and only this account has an annual fee of 1.5%. So that's really going to be 50 basis points or 0.5% going towards the cost of the investment or the fund. Again, this is just a hypothetical, no particular fund that we're talking about here. But these are typical type fees that you might see out there. 0.5% for the cost of funds, and then 1% tacked on for the advisor's fee. So a total all-in cost of 1.5%, and then we're using a hypothetical return of 7%. Again, investment returns will fluctuate and go up and down. This is just a hypothetical of a constant 7% return. So when we look at that, let's look at the cost over time of that account. I've highlighted here the 1.5% cost from age 40 to age 65, with the account growing at 7%. The cost is $431,000 for that investment fund. Our life insurance was $393,000. The investment account was $431,000. When looking for an account to store cash, what benefits do I want? This is a list of all the benefits I would love to have on my cash storage account. I would love for it to grow tax deferred. I would love for it to have tax-free distributions. I want a competitive return. I would love to not be limited in how much I could put into the account. I would love additional benefits, like maybe some long-term care benefits, some disability benefits maybe attached to it. I would love collateral opportunities, meaning I could borrow against it in order to go invest maybe, or to put money somewhere else. I certainly would want it to be safe. It's cash storage. Again, it's not an investment, so I want it to be safe. I want no loss provisions. I would love guaranteed loan options, meaning that collateral, when a collateral opportunity comes along and I want to take a loan against my money, I don't have to go through a loan qualification process. So I want a guaranteed loan option. If I do take a loan, I would love unstructured loan payments. I'd love to be able to pay back the loans on my own schedule. I would also love liquidity use and control. And then finally, if I could get it, I would love deductible contributions. Now, when I store cash in life insurance, when it's properly designed, I get all of these benefits except the last one, deductible contributions. Life insurance also has the unique benefit of being able to borrow against the cash value with a guaranteed loan option to then reposition that money into any one of these other assets. Many times people want to say, well, should I put my money in life insurance, or should I put my money in stocks or mutual funds or real estate or something like that? What we believe is, if you store cash in life insurance, when opportunities come along, we can use the money in two places. I can borrow against my cash value and go buy real estate and use the proceeds from the real estate rent to repay the life insurance. So life insurance becomes this great cash storage vehicle that allows me to own other assets as well and to earn possible returns in both places, both in the life insurance and in these other assets. So for the cost, which we just saw in the example we showed was actually less than an investment account, we get all of these additional benefits, and we can have that same investment account as well if we wanted it. I don't believe life insurance is the only place that we should have money, but I believe it's one of the first places that we should have money. I hope you found this video helpful, and if you did, please let us know in the comments below and share us with your friends. As always, we'd love for you to subscribe to our channel and click on that notification bell so that you can be notified when we post new videos.